Problems. We're going to talk about 3 very important problems. But we're going to take them lightly.
Yeah, okay. And one problem is bigger than the other one.
Exactly.
Yeah.
That's true.
What are the problems?
Euro dollar.
Yeah.
China. NVIDIA. Yes. So shall we start with, what do you like to start with?
You already made the program, the euro
dollar. Okay, we start with the euro dollar, which is maybe the biggest problem.
But not for everybody.
Not for everybody now. The euro dollar, since more than 20 years, hasn't reached the level where it is at this moment. We are at the moment below parity, which means that the euro dollar has a price of 0.99 cents for a euro. Which
it's almost the one to one.
Yeah. But below parity, that is extreme. Yeah. We haven't seen that since
we
2002.
We have a friend. He's on holiday now in the US.
Yes.
And it's really easy to because I was in New York in April and it was I think 1.6.
Yeah.
So I had to calculate every time. For now, it's really easy. It's 1 to 1.
But it is much more expensive now. Because I always keep in mind when you were in New York, you said beer is like $7 and $10, and alcohol is really expensive, and also food and restaurants.
Expensive. Yeah.
And when you then can calculate, okay, I have a 10% discount, you sort of like can defend it for yourself. You know, okay, well, but it's 110 for a euro. But at this moment, at parity, I think it's a big problem. I do think that a lot of Americans are looking at nice cars, European cars, because that is apparently.
Because they're the nicest cars.
They are the nicest cars, but Audi, BMW, Porsche, Ferrari, they are obviously now much more cheap for an American to buy than locally produced cars. What is the big problem here is, of course...
But a lot of them are also locally produced, no?
Is that so? I don't know.
I thought so.
I read in the news that the Americans now...
But mainly they have to import them.
Yeah, exactly. So what can we say about when we look at the euro in general compared to the dollar? Of course, the euro is very weak. We had a client here in the office the other day, and he literally said to us, I see poverty coming in Europe, and the only one that is actually going to be benefiting from all of this is the US dollar. So we
okay, but on the other hand, I saw also this week that 20 million households in the US have a delay in the payment of the energy bill.
Yeah, my God.
So I think it's I not agree with him, because I think it's a worldwide thing, and it's also in the US.
Yeah, absolutely. I mean, for and it's also for the export from US, it's terrible.
Yeah.
And if they're exporting oil,
well, you were saying, so for them it's interesting now to buy the expensive cars from Europe.
That's the thing. Of course, I mean, it's more expensive because they are obviously.
No, it makes
cheaper.
a difference.
And also for multinationals, in that operate in the US, for instance, it can also be interesting. There's two sides to it. But what do we see with the other currencies? Of course, towards the euro, really weak. We look at the Chinese renminbi, not that much, so it's not that extreme. The Chinese currency, of course, also lost. It's a worldwide phenomena that the dollar is stronger, but it's not that the renminbi was so much weaker than the movement in the euro towards the dollar.
No, but the thing is that the renminbi got stronger against the euro.
That's true. Yeah. So in general,
so you can also say the euro is really weak.
That's what I wanted to go to. The euro is really weak. Yeah. And if we then look at like the solid currencies made out of rock, which is the Swiss franc, it's completely flat. You don't.
They make them out of rocks.
That's rocks and banks. No, that's the only thing that you have. Mountains and banks. That's
I know. I thought that they made them out of metal.
Yeah, no. But I'm trying to say just like a statement here. Like the Swiss franc has not moved nearly anything towards the US dollar, which is of course a good thing for that currency. Let's talk further on China.
Yeah, we talked already about the currency, yeah. But China is in a bad weather, I think. And what did they do in 1 week? The Chinese government?
Well, they launched some sort of plan, no?
Yeah,
Is
but
that
they lowered twice.
Oh, do you mean the interest rates? Yeah,
Yeah.
that is quite.
They lowered, so everybody is looking at the euro.
Yeah, and this afternoon the Fed,
Yeah.
they're going to raise with 0.50 or 0.75, maybe even Jackson Hole. Yeah.
So everybody's looking. Most currencies, the interest rates are increased. China lowered the interest rates twice in 1 week, and together they also launched a support package of 43 billion dollars.
Dollars,
It was in renminbi.
200 something billion renminbi. Yeah.
There's something going on there.
Yeah, they really need to support the economy. And I said it to Taco last week as well. You guys last year in the summer, you brought up the Evergrande issue.
Yeah, that's where we started. We said this is a red flag.
Yeah.
And today, this week, at the end of last week, then also an important real estate. I think they are now the biggest real estate. Country Garden came with, and they reported some profit, but a 70% drop of profit. I think they are now the biggest real estate company
in the world.
In China.
Oh, in China.
Yeah. So also, if you look at the and then I think we're gonna look what's happening. Also, the stock market is going down. Last quarter, 12% down. If you look at the MSCI World, so the total world index went up at 8%.
8%. There's a massive divergence there.
You can say that.
Yeah.
And there is something going on. They expect still 4% or below 4% growth, GDP growth this year, and that's really low for China. And now you have. I don't want to say rumors, but analysts say it's a big chance that next year there is no growth.
Imagine how because do you remember in 2016 in February, March, there was just like, okay, this Chinese growth is going from 10 to 9.5 and the market dropped almost 8%.
Yeah.
And now it's these scenarios and we're actually, well, whatever, it's not an issue.
No, but you see also if you look at the bond market, the foreign investors like Goldman Sachs, PIMCO, they have brought down their investments in almost junk bonds, all the Chinese bonds nowadays, this year from 28 to 16%. So foreign investors, and also of course because of their position in the war between Ukraine and Russia, investors are only going one direction. And the government is investing. They invested relatively a lot in infrastructure, in bridges, and that's something, that's stopping now. They can't do that anymore. And also if you see that Chinese people are really afraid, so the amount of money is increasing, but they are not lending it out. So that's of course really bad for an economy. And a lot of Chinese want to get their money out
of China.
Yeah, but it's getting more and more difficult. And also, most of them they want to go to Europe, but Europe is also not accepting those golden visums anymore that much.
No, that is also stopping.
If you look for Portugal, 10 of the 27 EU countries have some kind of golden passport for people from China. But Portugal has a really a good one. If you buy a house of at least 500,000, you can get one, or an investment of 350,000. And if you look at 2014, 81% of all the investors came from China.
Really?
Now that they applied for a golden passport, and now it's only 16%. It's getting more because China is blocking to get the money out because they see the money increasing.
They see the money flowing outside of the country.
And if you, for Jack May was last week, he was in Lisbon to look at the opportunities. And also you have Fosun, it's a really big company. They are the biggest foreign investor in Portugal. But it's getting down because they can't get the money out. I think that China has a extremely big problem, and you have a professor, Pettis. He is a professor at the famous university in Peking, and he says this is going to be a really bad period for China. You can look it up. He has 5 scenarios what China can do, but he also says, but there is a small chance that China will do that. We spoke about what is the Evergrande, and
I'm listening to you.
80% of the private people invested in real estate, and that market is imploded. So it's China. It's getting a big issue. It's getting a really big issue.
Yeah.
I mean, it's with all the big things. You mentioned 2016 when the GDP was going down.
Slightly, yeah.
Yeah, and that's going. It's such a big thing, and if big like an oil tanker, if it moves that direction, it's really difficult to get it to another direction.
I think that is when we take that back to the euro dollar. This only makes the US stronger. Because of their strong currency. This is really giving that currency some extra strength. It's bolstering the dollar even more.
Yeah.
As being ever since 1944 with the Bretton Woods Agreement, where they said the US dollar is basically the principal currency, which later they came in the 70s, they put with the IMF and the World Bank, the British pound next to it, and so, but this is for the US dollar, only making it stronger.
Yeah, and because if you do you lower the interest rates in 2 times in 1 week, what's happening with your currency, you think?
Not positive.
No.
We saw that with the Japanese yen. Japanese yen was always like a safe haven. They said we're not going to do anything. We're not following what is happening in the West with the euro. We keep the interest rates low. Vroom. Japanese yen, normally safe haven. Now it's completely.
It's kind of a really sad story, what we're talking about.
Yeah, but it is also.
But the good
it's
thing
not sad. It's good for the Americans.
Yeah, and maybe good for us, for Europe.
Yeah, well, yeah.
But that I don't understand.
Or not, eh? Or Europe is just like what's the importance of Europe anymore?
It's the biggest economy in the world.
Oh, is it? I thought it was the US.
No, I don't. Europe, not as a country, but as a group.
As a group.
Yeah. And I think that
Europe is not a country.
No, not as a country. No, but not. So if you compare countries with each other,
okay.
The US is the biggest economy countrywide.
Yeah.
But if you look at the group, so America,
Germany,
US is also a group of states. I think it's a big shift because Europe was looking at China all the last 10 years, and now it's making the shift to the. But on the other hand, the euro is getting weaker against the renminbi this year.
Also that.
So export-import wise, it's quite interesting.
It's interesting and really complex.
Yeah.
Really complex.
Yeah, I hope we explained a little bit to make it a little bit more clear. There's something going on there. Last item, I think it's not that negative. We said
NVIDIA. No, because I had.
I think it's positive.
It's positive. Yeah. There's a positive thing for NVIDIA. Yeah. I had somebody that wanted to go short on the weekend. He said, "Yeah, we have to look at how can I go short in NVIDIA because I don't expect very good figures." Well, it's actually higher now this Friday than it was last week on Friday. So the figures came out this week. Are you going to tell us about it? Tell me about the figures.
It's more the outlook.
Yeah. What did they tell?
NVIDIA itself, or the analysts?
Well, both.
Now, if you go one step back, what is NVIDIA doing? What is their business model?
Microchips, no? Chips.
Yeah. On which sector?
Yeah, I'm not 100% sure.
No, I'm not asking you, but I thought you knew because you know so much. I thought you would.
Yeah, I have some. So I know that I think they're in almost everything.
But they specialize in graphic chips. But I always had, but I didn't want to say it. But maybe I was making. I didn't like to move myself on flat ice, but on glad ice. We said it on slippery ice because I thought it was for computer games mainly. Yeah. That's what. Yeah, but they are specialized in the certain sectors. Gaming. So that's where they have the special CPUs for. But they also were specialized, or they are specialized in chips for mining of cryptocurrency. And that is, of course, in this year, the last quarter, the demand is a little bit lower. Yeah. The gaming industry demand is also lower compared to the COVID periods, because then everybody was gaming. So that's and they are moving more to the artificial intelligence. Automotive, the auto steering. So you're getting
transition period, maybe.
Yeah, and they're moving to the chips that you need for your car if you want to have it steered automatically, and they're also quite big in chips for cloud servicing for how do you call those computers? The cloud, the where you storage computers.
Yeah, I know what you're saying. Like data centers.
Data centers. That's what I'm looking for. But in the last figures, they have a broken book here. In the last figures, they mentioned that the data centers are not going very well. So that's what the market was a little bit surprised of that part. And they also think that this year, this calendar year, is not very well for them. But the market expects that in 23, it will pick up.
Yeah.
And they also think that the bottom of the gaming the chips will be reached now or really soon. So the market thinks they were surprised about mainly the write-offs or the outlook or the existing figures of the data center chips, but the market thinks this will go on for a couple of months, and next year it will grow.
Yeah, but if you look from a technical perspective at the stock, I mean, in Christmas you could buy NVIDIA for $350, almost $346.
A chip, is it
the company, yeah?
Oh,
the company, the stock. I don't know how these chips are. Well, we ordered new garage doors, and the guy said we had a proposal in April, and he had to come back to it because the chips in the garage door said, well, where's the chip in the garage door? It's apparently in the engine. It's so much more expensive for the remote control to open it.
Yeah.
So the chips, I think they must be really expensive.
And you believe that guy?
Well, what can I say?
No.
I'm going to argue that, but just the chips on itself, I don't know what the chip might cost. I don't know. You know?
No.
But we're looking at the stock from a technical perspective. It is. You can't say it's oversold, so we look at the relative strength index, which is an indication, we explained it a couple of times already in the vlog, it's an indication whether the stock is oversold or overbought, and it moves between a bandwidth of 30 and 70, and at the moment it's exactly in the middle, it's at 50, so you can't say it's oversold, but it is at the moment trading at the 76.4% retracement level from the highest point in November, December last year. So you can see there's the stock price has gone down dramatically. And the most important thing is that you see a slight pickup now. So it's moving away from that lowest point, from that 76.4% retracement. It's moving towards, and that's when, and I'm not going to talk again about Fibonacci because I'm also about my Fibonacci, but the most important.
Have pictures of him
at home, yes. Yeah. I have them in my phone at my screensaver, Fibonacci. But the 61.8 and then the one above, those are they're also the golden points, and that point is at the moment at $204. So if we see NVIDIA moving towards the $204, that could be some sort of like confirmation that they found the way back up, and that might be also in line with what you just told about if they manage to to survive the next coming months, and they will pick up then, and they are able to get the price of the stock back up. 204 is a very important level. MACD, so if you look at just what is the sentiment at the moment, where is it moving? So it's at still negative territory. So we're in a negative trend at the moment still. If you look at a daily chart, I looked at a daily chart, and we'll put it in the screen as well, I think, no?
So I don't know.
If
we don't do that, so
no,
we can't.
At least we are going to send the chart to our
the team of people that
editing team. So we hopefully you see it in the screen.
Yeah, and if I can close down with some fundamentals, you mentioned the development of the stock.
Yes.
In the beginning it was $300. It went down to 145, so it halved. Yeah. A little bit more. It's now around 179, 180 trading. Yeah. So 300, 145, and 179. And the last quarters, the revenue of this year, the revenues, profit, assets all went up, and the debt was down. So that really looks
positive.
Well.
Fundamentally, it's interesting. Yeah.
But if you look at the profit per share, for next year, again, have a broken brook year, that is $3.52, and then. If you look at the price earnings, so you divide the stock price by the profit per share, then it's 50.
It's quite expensive.
It's quite expensive. So, but if you combine, you think, okay, it's a negative trend, but at the retrace, so the ROC is in the middle.
Very, very good point that you say here, because that's also what we saw with the Dutch payment provider, for instance. With these, there's a lot of growth expectation in these stocks. So when they come out. When they come out with figures, they have to be really good. Yeah. Otherwise, they will get punished straight away, and that's what you also see here. The growth.
179 now. Target price of the analysts, they're really positive on the share for over a year. Well, the target price, 227.
Which is exactly at the 50% retracement, says Fibonacci.
So conclusion, nice company, they're doing a good shift. Price is low.
Yeah.
But there is some pressure on it. And the market thinks that next year they can grow a lot again.
Yeah, they can grow a lot. Yeah, that's sometimes where in the price earnings you have to look at the price earnings growth as well, for the next couple of years. That gives you a better understanding sometimes about these things.
Difficult times.
Yeah,
but also chances.
Absolutely. Give us a thumb if you like this video, and then we hope to see you next week again.
Thank you for watching.